Good day, Junior Dickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 10, Activity 3. The information appeared in the books of Maxi Traders. The financial year ended 28th February 2023. The business applies a markup of 80% off on cost. So what is expected of us? 3.1. Analyze the adjustments under the headings on your answer sheet. So you need to indicate under assets, owner's equity, liabilities, an increase with a plus and a decrease with a minus. So we need to complete the accounting equation. 3.2, prepare the closing transfers in the general journal and then prepare the trading and the profit and loss account. So as we've done with the previous activities, we are going to start first by doing the adjustments, T accounts, and from there we'll complete the rest of what is required. Starting with adjustment number 1. Goods donated to the local school at a selling price of 900 has not been recorded. Now be very careful with this one. When we're donating goods, it's at cost and not at the selling price, which means that we need to first calculate but what is the cost of the goods that were donated. The two accounts involved, donations and trading stock. Trading stock is regarded as an asset. It means that the balance brought down will appear on the debit side. There are no total brought forward for donations. It's the first time that we are going to open the account. So to show the goods that were donated, as mentioned earlier, we first need to work out but what is the cost. So if the markup percentage was 80% on cost, it means we need to take times 100 divided by 180 to find the cost. Trading stock is going to be credited, account debited, donation. This will increase our expenses. Adjustment number 2. A physical stock account revealed that the following stock was on hand at year end. Trading stock, 85,900. Now, what is a common mistake? We compare that 85,900 with the amount from the pre-adjustment trial balance. That would be completely wrong. You need to first do the adjustment with regards to trading stock, which we've done with donations, and then we need to find the new balance. That should be compared with the trading stock, what we physically counted. So in order for us to solve this, I'm going to, with the trading stock account, indicate the physical stock count. We counted that we've got 85,900 left over. Balance brought down means balance carried down. Now just take the debit side and minus the credit side to see if there is a deficit or a surplus. If the credit side is more than the debit side, it means there's a trading stock surplus. If the debit side is more than the credit side, it means that there is a deficit. So if I take now 85,000 minus 500, it means that according to my books, I should have 84,500 left over. So the physical stock count indicates more. This means that difference of 1,400 is the trading stock surplus. And trading stock surplus is regarded as an income. For every debit, there's a credit. Packing materials on hand, 580. Packing material is an expense, which means the total brought forward is on the debit side. Whatever is left over is subtracted and taken to consumables on hand, which is a current asset. At the end of the accounting period, after we've done all our adjustments, income and expenses must be closed off. It means donations will be closed off to the profit and loss account. Trading stock surplus will be closed off to the profit and loss account, and packing material, take the debit minus the credit. This is my expense for this accounting period. Adjustment number 3. Insurance includes an annual premium of 3,840, which has been paid for the period 1 October 2022 to 30 September 2023. So if you see the word annual premium, annual means 12 months. And then if we also look, October till September is equivalent to 12 months. So what is the problem here? Our accounting period ends 28th February 2023, which means that anything outside of the accounting period must be taken out. This insurance premium was taken out on the 1st of October until 30 September, which means 7 months was paid for in advance. Do not take the total from the pre-adjustment trial balance and say times 7 divided by 12. Included into that total is an annual premium of 3,840. That's the amount which we need to take and say times 7 divided by 12, which means insurance, it's an expense which have a debit balance. How much must be taken out? Where to? Prepaid expense. It doesn't form part of my expense for this accounting period. It will only in the next accounting period. Insurance credited, prepaid expense debited. At the end of the accounting period, we need to close off all income and expenses. Insurance is an expense which is closed off to the profit and loss account. Adjustment number 4. The telephone account for February 2023 had been received but not yet paid $780. It means it's still outstanding. And if it's still outstanding, it must be added to the total brought forward from the pre-adjustment trial balance. And anything still outstanding, where do we take it? To accrued expense, which means that telephone is going to be debited, account credited, accrued expense. There's no calculation involved here. The figure was given. At the end of the accounting period, all expenses is closed off, which means that telephone is closed off to the profit and loss account. Adjustment number 5, rent amount to $7,500 per month. So what's happening here? If the rent is $7,500 per month, it means over 12 months, our rent should have been $90,000. Now, if I'm talking about the rent, what am I talking about? We're now going to look in the nominal account section. There is rent income, which only shows $82,500, but it's supposed to be $90,000. That means that there is still rent which is outstanding. And anything which is outstanding must be added to. So we start with the total brought forward from the pre-adjustment trial balance. My rent is supposed to be $90,000 for this accounting period. That is the amount which will appear in your profit and loss account. It means that the difference is what is still outstanding, which should go to accrued income. Account debited, accrued income, account credited, rent income. Adjustment number 6. Jafta, a debtor for $2,300, was declared insolvent. A dividend of 70 cents in the rand was received and recorded. The balance of the account must be written off. So what is happening here? This debtor is declared insolvent, so we're only going to get some of the money, and the rest must be written off. Now, in this adjustment, it specifically said the amount received was 70 cents for every 1 rand which was outstanding. That has been recorded. The only thing that we need to find out, but what is then the amount which will be written off? So I said a little bit earlier, for every 1 rand, which means that if 70 cents is received, it means that 50 cents is going to be written off. That's why we're going to take 2,300 times 50 cents. Bad debts is an expense, which means the total brought forward will appear on the debit side. Debtors control is an asset, which means the balance brought down is on the debit side. Bad debts is going to be debited because our expense is going to increase with 690 account credited debtors control. At the end of the accounting period, all income and expenses is closed off, which means that bad debts, which is an expense, will be closed off to the profit and loss account. Adjustment number 7. The total interest on loan according to the loan statement dated 28th February 2023 is 4,800. So that's the total interest for this entire year. If I go to the pre-adjustment trial balance, I've got interest on loan, 3,550. But the loan statement said it should be 4,800, which means that there's still interest outstanding. The same approach as we've done before. Our total interest for this year is supposed to be 4,800, which means the difference is 1,250, which is still outstanding, and this will now be added to the loan account. When they're talking about loan statement, interest is capitalized, which means it will be added to the loan account. Adjustment number 8. The February bank statement was received and the following differences must be adjusted: cash handling fees, service fees, interest on credit balance. So to start off with, we've received a bank statement. From the bank's perspective, credit means that the business deposited money into their bank account, the business received money. Debit means that the business made payments. So if you see cash handling fees, service fees, that means that is bank charges, which they have charged us. So you need to add this together. Interest on credit balance means credit, positive, from the bank's perspective, it means that we've received interest. You need to make sure that you understand on a bank statement what debit and what credit means. So to first show the bank charges is an expense. Total brought forward from the pre-adjustment will appear on the debit side. We need to add bank charges of 292 to that. Bank is going to be credited. Interest on current account is an income which will be credited. Account debited, bank. All income and expenses must be closed off at the end of the accounting period. Bank charges is an expense which is closed off to the profit and loss account, and interest on current account is an income closed off to the profit and loss account. Adjustment number 9. An amount of 390 was received from Mika, a debtor, whose debt has previously been written off as irrecoverable. No entry has been made. Again, be careful with this. The business received money, but the business didn't receive money from a debtor. This debtor's account was written off as bad debt. So if they later come and they make a payment, it means that we've recovered that money. So now we need to indicate the business received money because of bad debts recovered. Do not credit your bad debts and say your expense is going to decrease. This must be shown as bad debts recovered. Account credited, bad debts recovered, account debited, bank. At the end of the accounting period, all income and expenses is closed off, which means that bad debts recovered, which is an income, will be closed off to the profit and loss account. Adjustment number 10. The owner took 1,000 every month for own use. The bookkeeper recorded it as salaries. Correct the error. The business entity guard principle says that the owner's personal finances must be kept separate from the business, which means that when the owner took money from the business, took 1,000 every single month, this should have been shown as drawings, but instead it was shown as part of salaries, which means we need to correct that. Step number 1, over 12 months, 1,000 times 12 is 12,000. Salaries as a total brought forward from the pre-adjustment trial balance, 90,000. This should have gone into drawings, which means that salaries is now going to be credited, account debited, drawings. At the end of the accounting period, all income and expenses is closed off, which means that your salaries is an expense which will be closed off to the profit and loss account. Adjustments is new to grade 10 learners, so you do find it more challenging. Make sure that you practice with T accounts, T accounts, T accounts. It's a tool that you can use to understand what is it that I'm supposed to be doing. Now, the first part of actually completing this whole activity is to complete the accounting equation. So we've done now all the adjustments. We've looked at each one of them individually. Now it's just a case of indicating that how does that affect the accounting equation. So starting with the first two adjustments, adjustment number 1, it's goods that was donated to the local school, which means that donations were debited, account credited, trading stock with 500. Effect on the accounting equation, assets minus donations, because it is an expense which increase, it will have negative effect on the owner's equity. Liabilities, nothing. Adjustment number 2, first, it was the trading stock that we needed to calculate, was there a surplus or deficit? To indicate that, account debited, trading stock, account credited, trading stock surplus with 1,400. Assets plus income will have a positive effect on the owner's equity. Liabilities, nothing. Consumables, packing material that was left over is taken to consumables on hand. So account debited, consumables on hand, account credited, packing material, amount 580, assets plus, because my expense decrease, it will have a positive effect on the owner's equity. Adjustment number 3, the prepaid expense with regards to insurance, account debited, insurance, account credited, account debited, prepaid expense, account credited, insurance, amount 2,240. Because my expense decrease, it will have a positive effect on the owner's equity. Prepaid expense is a current asset, which will be positive. Adjustment number 4, telephone account, which was still outstanding, which means telephone is debited, account credited, accrued expense. Because my expense increase, it will have a negative effect on the owner's equity. Liabilities plus. Adjustment number 5, rent income and accrued income, account debited, accrued income, account credited, rent income, amount 7,500, assets plus, because my income increase, it will have a positive effect on the owner's equity. Adjustment number 6, we had to write off a debtor's account because we're not going to recover that money. The debtor was declared insolvent. We only received some of it. Account debited, bad debts, account credited, debtors control with 690. Expense, because my expense increase, it will have a negative effect on the owner's equity, and debtors control is regarded as an asset. So if you don't understand your basics, classifications of accounts, then you're not going to get this right. Adjustment number 7, the total interest on the loan. Interest was capitalized and interest was still outstanding, which means account debited, interest on loan, account credited, the loan account. Because my expense increase, it will have a negative effect on the owner's equity, liabilities plus. Adjustment number 8, the February bank statement was received. The bank charges still needed to be shown, as well as the interest on current account. So the first part of this transaction, to show the bank charges, account debited, bank charges, account credited, bank, amount 292. Assets minus owner's equity minus liabilities, nothing. To show the interest, account debited, bank, because we've received money. So your assets will increase, and because my income increases, it will have a positive effect on the owner's equity. Adjustment number 9, an amount of 390 was received, and this debtors account was previously written off. So we've recovered money. If the business receives money, bank is always debited, account credited, bad debts recovered, assets plus, owner's equity plus. Because my income increase, it will have a positive effect. Then the last one, number 10, salaries and drawings. Drawings, the owner took for personal use. We needed to correct this mistake because it was incorrectly added to the salaries account. To correct that, we needed to credit salaries so that drawings can be debited. Amount 12,000. Assets, nothing. Owner's equity, my expense decrease, which will have a positive effect on the owner's equity. Drawings that increases will have a negative effect on the owner's equity. Liabilities, nothing. The same as before. We are now first going to complete the trading account and the profit and loss, and then we're going to complete the journals. Take note, I'm doing the ledger accounts without the dates and with the folios. A reminder, when we do final accounts, it happens at the end of the accounting period. And when does your accounting period end? 28th February 2023. So all of this will happen first in the general journal. It could be in a test and exam, which I've only asked you to complete these 2 accounts without even the accounting equation. So what is our step number 1 when it's asked in this way? You should know that when we're looking at the trading account, we want to calculate the gross profit. When we're looking at the profit and loss account, we want to calculate the net profit, which means all income and expenses will be closed off to these 2 final accounts. That's why we start with the nominal account section, and everything in the nominal account section must be taken to the trading account and the profit and loss account. Then you complete the adjustments, and after you've done the adjustments, what is the final answers? Make sure that you show your calculations in brackets. I'm going to say this again. If your answer is correct, you get full marks. But if your answer is wrong and you don't have any calculations in brackets, you lose all the marks. Do not forget your first closing transfer. Debtors allowances is closed off to your sales account. Then sales is taken to the trading account. Then cost of sales is closed off to the trading account. Once we've done that, we can calculate the gross profit, which is taken to the profit and loss account. Now again, we've already done the adjustments. So we are just going to look at the adjustments and everything in the nominal account section, which means all income and expenses, which should be closed off to the trading account and the profit and loss account, either or. So starting with donations. Donation is credited because it's an expense, account debited, profit and loss account. Trading stock surplus is debited because it's an income, account credited, profit and loss account. Packing material is an expense, which is credited, account debited, profit and loss account. Adjustment number 3, insurance is an expense, which is credited, account debited, profit and loss account. Number 4, telephone is an expense, which is credited, account debited, profit and loss. Adjustment number 5, rent income is an income, which means it's debited, account credited, profit and loss account. Adjustment number 6, bad debts is an expense, which is credited, account debited, profit and loss. Adjustment number 7, interest on loan is an expense, which is credited, account debited, profit and loss account. Number 8, bank charges is an expense, which is credited, account debited, bank charges. Interest on current account is an income, which is debited, account credited, profit and loss. Adjustment number 9, bad debts recovered is an income, which is debited, account credited, profit and loss. Salaries is an expense, which is credited, account debited, profit and loss account. For adjustment number 10. Once we've done all the adjustments, we can now close the brackets. We start with the trading account. Sales minus debtors allowance equals the total sales minus cost of sales means that we can calculate the gross profit, which is taken to the profit and loss account. We can now close off all other brackets, and when we add now, we need to see, does the debit side exceed the credit side, or is the debit side less than the credit side? Because why? If my credit side is more than the debit side, it means the balancing figure will appear on the debit side, the business made a profit. But if the debit side is more than the credit side, it means that the business made a loss. So you always need to check. Here it's clear that the credit side is more than the debit side, so I'm going to add up the credit side minus everything on the debit side, which means the business made a net profit of 211,518. Completing now the general journal. I'm going to use the trading account and the profit and loss as a base to work from, because everything is now written in there. I can get all the information from there. Starting with debtors allowances, which is closed off to sales, account debited sales, account credited debtors allowances. In the general journal, the account which is debited is always written first. Then we need to take cost of sales to the trading account. Before cost of sales. Then sales is taken to the trading account, which means that sales will be debited, account credit, trading account. Now we can take cost of sales to the trading account to show that trading account is debited, account credited, cost of sales. Once we've taken the sales and the cost of sales, we can calculate the gross profit, which means account debited, trading account, account credited, the profit and loss account. So when we're doing it directly in our journals, we would take 720,000 minus 440,000. Our next step, all income is closed off to the profit and loss account, which means that all income accounts will be debited, account credited, profit and loss account. The total income was 94,900. Next step, all expenses is closed off to the profit and loss account, which means the expense accounts would have been credited, account debited, profit and loss account. Always start with the account which is debited first, which means our total expenses added together equals 163,382. Gross profit plus income minus expenses equals the net profit. So here we balance the account. We took the credit side minus the debit side. So that was our balancing figure. To show the net profit, it means that the profit and loss account is debited, account credited, capital. The last step, drawings must be closed off to capital. But now, do not forget, we had an adjustment with regards to drawings. The balance brought down from the pre-adjustment trial balance was 171,700. Salaries was credited so that drawings can correctly be debited. After we've made the adjustment, that is closed off to the capital account, which means that drawings is going to be credited and account debited, capital, and that is going to go into your general journal as your closing transfer. Thank you very much. The important thing in life is to have a great aim and the determination to attain it. Have a wonderful day.